Hi, good morning. I'm Nicholas Morgan, a client portfolio manager here at npower's optimisation desk. Welcome to today's market update on Wednesday, the 2nd of November. So to start with this morning, we've seen gas prices come off a little bit in the prompt markets, whereas the same contracts in the power market have continued to find support. This is due to a tighter power system as a result of flows going from the UK to France via the French-UK interconnector. This is usually in the reserve position, so suggesting that we've got less power in the UK market. That's the key headline this morning. If you've got any questions or want to get in touch, there's the email address or our number below. Please continue to listen if you'd like to listen to us in the update. So moving on to the UK gas system, it's currently forecast to close 15 MCM in length this morning. This is as a result of healthy flows from Hornsea, a mid-term range facility which has been taking advantage of the high gas prices along with many of the other pipelines. So we're seeing for the first time since the 12th of June the IUK pipeline is now importing from Belgium. This is contributing towards a pretty healthy fundamental picture for gas today. Power, on the other hand, is forecast to have a slightly tighter day today, with the peak power margin around 9 gigawatts. While we do have healthy wind generation at the moment of around 3 gigawatts, this is expected to drop off to around 1 gigawatt later today. The Dutch interconnector is currently exporting to the UK at their capacity levels, whereas the French interconnector isn't, and it's currently in reserve position, so the UK is sending around 2 gigawatts of power to them currently. We've seen the oil market come off recently, so we've had losses for the past 4 days. This is as investors are awaiting US stockpile data, which is out today, and it's suggested that there's been a lot of investors selling off any long positions as the OPEC deal dwindles and less confidence is being taken from any deal being reached. The sterling has fallen back against the euro over the past 24 hours. But what is notable is the UK currency has moved higher against the dollar. Typically we would expect the UK to move in tandem with the two in times of the sterling weakness, which suggests the declines are expected to last until November. In fact, the euro dollar has surged by the same amount, so what we can say is that the dollar weakness is being seen across the board and the euro is seen as more of a safe haven at the moment. This is as a result of gains by Donald Trump in the US presidential election campaign, which suggests that there might be less chance of an interest rate rise come the result of the presidential election. That concludes the market update for today. If you've got any questions, do get in touch, otherwise we'll see you at the same time tomorrow.